Hi traders, here's an example of an M pattern or a double top trade that I unfortunately missed because my internet connection decided to freeze right at the precise moment. So this setup happened on AUD USD, on AUD JPY, Euro USD. It not so clear, but you can actually see it on Pound JPY and did I say Euro JPY as well? It happened on both of these as well. Now I'm looking at these because of the correlation that these two had. The other thing was the pattern that was forced here was actually as a result of some Japanese news, which pretty much was better than expected. Now, what happened was they possibly had a lot of buying pressure with the yen, and so these guys released those orders quickly or early, and that forced the euro and the pound south. Now, whatever happened here, this actually had a positive impact on what I was predicting for the euro and AUD pairs. So in this case, what you're seeing is the perfect M setup. Okay, so here with the Euro USD on a 15-minute chart as well, this was a prediction that this was going to come down. Now, this is an example, what I wanted to show you, of how this may not look like a perfect double top or a perfect M. Okay, so in this case, though, it is. Now, I've traded these today earlier, some of this sort of stuff earlier, and I won those trades, but this one, unfortunately, I missed. Now, I'm going to expand on AUD JPY to show you what the setup would have been. Now, here's the thing that I paid attention to. First of all, here was the high of the New York session. Market pulled back down and consolidated. Going on from yesterday's video, when I was predicting that this was a W formation, you could have taken the binary trade off this here on the pullback. Now, the pullback serves for two purposes. One is that, say for instance, the market decides to end in the red slightly. If you still are reasonably in the wick space, then you're still going to be safe somewhat, unless it's a long red candle. The other thing is, though, that if you're somewhere in the wick space, even if this comes back down and closes in a doji, and like one of these sorts of setups, there is always a chance that that can happen, because the market maker may say, well, you know what, I'm going to close off this trade with a doji. I'm going to consolidate the market for the next hour or so before I make a move, because this is coming or nearing towards the next session. Then you want to make sure that you're safe. And this is where what the risk with binary is, because I can predict where the market's going to go. I just can't predict when exactly the market maker will say, okay, I'm ready to make my move. These sorts of behaviors here, where this first candle does actually make a significant move, is just another confirmation for me that this is going to do what it's going to do. And just to ensure that I've got a higher percentage chance of winning that trade, I'm trying to get into the wick space. Okay, now here's the trade you could have taken yesterday, this one here, but notice how in my prediction in the video was that after my W, I did expect that there's going to be a pullback that's going to happen going into the next session before the market climbs back up again, right? Now, for Forex traders, you could have actually taken your trade somewhere after the pull outside of this zone. So on this candle here somewhere, you could have taken your trade out, because you're wanting the market to do a push. You possibly might have even taken it here somewhere and then panicked for 45 minutes. That's okay, because your stop loss would have been somewhere down here. But here's the thing, you would have known that the market is going to push back up because of this behavior here, right? This W formation. If you want to play it safe, certainly wait. And what you could have done is possibly waited for another 30 minutes or another hour and a half after this one to ensure that this candle, or this one, finishes in the green. And then so when this starts off in the green, certainly anywhere in the first quarter of this, you could have taken a long trade going up with Forex. So anyway, fast forwarding. Market went up, pushed back down during the New York session, and then consolidated. So I'm looking at what the market did here. I paid attention to the first quarter of the Asian session, where it did push down. Now I'm looking at these three candles, and then this one here. To me, that is a false move. Market's going to go north now. Okay. Again, here's the other thing. After the W formation, my expectation is that there's going to be reasonable pushes to the north. After an M, my expectation is there's going to be reasonable pushes towards the south. Any of you that are following, like, the Wolf wave or the Elliott wave, even, long-term Fibonacci and stuff, all of this actually works in exactly the same way. When I'm talking about M's and W's, I'm really talking about double tops and triple tops and double bottoms and triple bottoms. This is just standard classic stuff that's been taught for ages, right? I'm just trying to simplify this. So you're expecting that there's going to be a significant number of pushes, or a significant push at least a few times, a couple of times, few times, all right? I would say this is the first pullback, this is the first push-up, second push-up, and we can consider this to be the third push-up. Now, here's what I'm starting to pay attention to during the Asian session is one, okay, I'm looking for a false move in the wrong direction, okay? Market pushes back up and then it does something like this. You can even wait for this candle here for the market to initially push past this zone here. Now, again, in this video, I'm going to state I've got Bollinger Bands here. And for anyone that like to know, period is about 20 and standard deviation is 3 for me, for my setups. Now, at any point in time you see your Bollinger Bands constrict like this, then that's accumulation phase. The market makers or your brokers, the big ones, whoever's handling these transactions at the present moment, they're not releasing into the market. What you're going to see at some stage is that there's going to be moves like this, bigger candles that are going to happen. And if you're paying attention to the ends of the Bollinger Bands, you're going to see that they push in opposite directions and they're expanding outwardly. Now, when at any point in time, if you're seeing this on any time frame, right, what that means is the orders are now being transacted. They're being released into the market. So we see something like this. It comes and penetrates somewhere near the Bollinger Band, penetrates here, pushes back out again, and then it goes towards the following one. You can't do reversal trades on these ones, especially when you're looking at the top of these and there's not a significant push down on them, simply because there's a crap load of money now that's just been released into the market, and this market is going to go up that direction. So what we're doing here is we're going to do trend follow trades only. We're going to wait for those situations where the candle opens, pushes back down, and then goes up. So once this started, I'm not doing any reversal trades on these whatsoever. What I am doing is waiting for signs and signals from the market to say, all right, we've actually completed our trend run. We are now going to go enter into consolidation. So what I did was I walked away, came back, left my computer on, came back, and then I noticed this, okay? What I wouldn't do straight after this, and I know some people are probably trying to, I would not enter, especially because at some point in time, this big green candle here was a red one, right? What you could have done is followed the other strategy of the EMA6 one to say when the candle opens, it pushes back down. If it's below the EMA6, especially after this green candle here, red one here, if it's significantly below the EMA6, you can take a call trade on this, right? The reason for this is the market has now completed its trend run. It's now entering into a consolidation phase. Sometimes this candle may come down and be a red one, but the market's the next one's probably going to push back up and then consolidate, right? You're not going to have situations, well, rarely anyway, where the market's going to go up and then straight after on this next candle is just going to come back down again. That's not the purpose of what the market maker is trying to do. So what they have done in this case, push the market up, trap traders pull the market back down, end in a red candle, and then just enter consolidation for a while. What I do though is I take note of this. This is part of my analysis for a future trade. All of this here, all of what happened throughout London session and New York session is actually setting me up for this trade here. That one there. Okay, so if you're only going to do 2 or 3 trades a day and you're looking for your amazing setups where you know you're going to dump a fair bit of money onto this and you win it, that's the analysis that we're putting into it. So I wait for this, I wait for the consolidation, then I wait for a few candles pushing down. This could be 2 candles, it could be 1 big candle, this could be 3 candles in this instance. Sometimes it will probably be a 4th candle with a nice long wick down the bottom here. Now, when I see this happen, and this consolidation, here's what's going on in my head. I now know, especially this is going in towards the middle end of the Asian session, I now know there's going to be consolidation for a bit, and then this market's going to push back up again. Right? I actually did take a trade off here. Now here's what I was testing was I took a trade here for an hour and 15 minutes. Okay, and won the trade somewhere here. The reason for this is I now know that this is going to most likely be a double top that's going to happen here. That the market maker has already issued me its sign. It's most likely not going to push back up here. So I do know it's going to push somewhere close to this. Why? Because they want to trap more traders, right? So they're going to push somewhere close to it. I took a trade for maybe, and you could safely do one for about 45 minutes or so, maybe maximum an hour or so, because just in case there's going to be one spike to the low or spike to the high or something. But this actually did work for me really well. Now, I took the trade here. Why would I have taken the trade here? Because this consolidated for a bit. I looked to see how much time I actually have before the market goes into Frankfurt and then into London. And I thought, look, if I get in the entry somewhere down here, I know the market's going to be up here somewhere at some point in time. I actually was expecting them to push higher. But then I was probably expecting it to have one more green candle before it entered consolidation, and then the pullback started. So either way, it still was a comfortable win. Now, after this, what I'm expecting to see after this move here is longer candles and wicks to the top, right? The reason for that is, again, market maker is going to repeat the whole double top process. Okay, so this is the second top. And again, I know that the market's going to come down. I would not. Okay, remember I said yesterday, and I've said it in many of my other videos, where I will ensure that I'm going to look for signs and signals from the market to not take the trade. Here's one massive one. When this sort of setup is happening towards the end of the present session, and when I'm talking about this, I'm talking about your end of Asian session and possibly towards just before the start of New York. Simply because whatever the move is going to happen in the next session, right? Very rarely would they move quickly. Sometimes they will move quicker than normal, simply because they want to keep you on your toes as well. Now, I probably would not have taken this trade here, because it's too close towards the end of the Asian session. So what I am doing, and for those of you that are probably looking at my time and calculating, London hasn't opened yet, but the calculations that are probably happening at this stage is simply because I've shortened my Asian session, this box, right? So part of the reason why I would not have taken this trade here, although this looks like a clear win, is because I know there's possibly going to be a false move going up. In my opinion, this wasn't high enough. Right? So what does happen? The market pushes up. Now, I'm watching this candle. Once this pushes up, here's what I'm thinking. I'm thinking, okay, this is the stop hunt that they're doing. So if this would have gone higher than this point here, I'm going to draw a a horizontal line on there. If this would have gone higher, this candle here, than this point here, somewhere up here, I would have considered taking a reversal on this candle here, because I'm pretty sure this is going to create a bit of a wick for me. Didn't go high enough. This is unfortunately where my internet shut off, so I took off. And then by the time I came back, we were somewhere halfway through this candle here. I had to reset my modem and stuff to get back into it. But here's what I would have done. At this point in time, I probably would have waited to see if the market is going to push down. When it did, very comfortably, I would have waited. Now, considering there's a wick on this one, there was a slight pullback, what I would do is wait for a slight wick on this one here. Okay, there are some instances where you probably wouldn't wait for a wick, and the instances that you wouldn't, it's like this sort of stuff. See how the candle here is very close to the bottom of where the wick is on the bottom here. Let me zoom in to show you clearly. See how there's hardly a wick on this one. There is a tiny one, but it's hardly. So the body of it is very close to the closing point of where the wick was. If you see those instances, then you can possibly take the trade immediately on these candles. But if you're seeing a wick here, then I'd probably wait for a bit of a pullback on this one. And again, if you're jumping into the pullback, chances are if this still continues and closes off in a little tiny doji like this one, what you can do is, what will happen is you'll probably still win that trade. Okay, so either way, you could have taken this trade and won it. Now, for those of us that would have taken the Forex trade on this, and this again, this is the first wave, second wave, third wave, this is the fourth wave, not this one here. So if you would have taken a Forex trade on that one, probably push down for as long as you wanted to. If you set your goals, 20 pips on a singular trade, again, 20 pips is quite reasonable on a standard lot. You'll probably make about $200 or so off of that. If you have 10 standards, we're talking about 2,000. So that would have been your Forex trade, and then here, this candle here, would have been your binary trade. For those of you that are already trading this and having successes, fantastic. What I'd like you to also now do is possibly look into demo trading this third candle. Okay, see if you're getting those 3 wins. Now, with the third candle again, notice how there's no wick on this one, so you could have possibly just jumped into it. But let's say, for instance, that the market, and because this is still in Frankfurt right now, market probably will push back up slightly. They might come back for a 4th hit to the high. What you could do is wait for the pullback. Wait for price to come somewhere close to hitting your EMA 6 line or having gone over it, and then you can do another put on that to push the market back down again. See this in this case here. This would not have been at your EMA 6 line, I suppose, at that point in time, so you'd be lucky there. But this sort of behavior can always happen. Certainly this is your perfect trade, this one here. This is a potential trade here, but the analysis, consider the analysis that went into this trade. It's where you're able to see that this sort of behavior, like when this pushed up, I knew this was going to happen. So it's when something becomes so familiar to you that you can constantly trade that. Now, going back to the tiled screen, if you're looking at correlation, you're looking at similar behavior throughout all of these or whatever currency pairs you have, you can trade them. This one here, Euro USD, here's a classic example of how the market doesn't show you exactly the patterns. This is still a double top, but this is not like a curved double top where you look at this and you say, yep, this is what's going to do. How I knew this is going to do it: 1, correlation between the other currency pairs. 2, I'm looking at this. This market pushes back up, going towards the end of my Asian session. Excuse me. Now I know that there's every chance that this market is going to bounce off this area here. So you could draw in your support and resistance line somewhere around here. Okay? Take note of how the market behaves around here. And even if you wanted to, I didn't do it in this instance, but what you could do is jump onto a higher time frame. Check to see where a resistance point is for your 4-hour chart or your 1-hour chart. Okay, if you're seeing a resistance point somewhere, then certainly look into it. Look on a 30-minute chart, that was still a resistance point. Okay, here's the other thing. Look at my 50 EMA. Look at where that is. Now, not only that, with my Bollinger Band, again, here's the period and standard deviation set at 3. You can utilize this, guys. I'm trying to put something together here where you can almost blindly trade this instead of me just saying, guys, follow price action. So this is the reason why I've added all this stuff back on here. Now, you could have looked at position of the candle in relation to where your EMA 50 is, also where the Bollinger Band is. If price is going to hit somewhere there and price is hit at a point somewhere near there, chances are there's going to be a bounce back, right? Increases your chance of a successful trade. So that's what you're looking for. But what I would do is I'd wait for this to happen, and you could trade these. You could do reversals off of this as well, especially if you're using the trend lines here. However, I must state this one though. It's this trend line here, dynamic trend line, would not have been in this place because this probably would have waited for this candle to close off before it actually readjusted. Okay, so when we're looking at the charts in hindsight, sure, it looks fantastic. We just said we're going to hit this trade, but it's not always going to happen that way. So what I would have paid attention to is a resistance line somewhere here, and then possibly waited to see what this candle's doing. So once this candle closes off down here, that's a pretty big move away from where the market maker was 15 minutes ago, right? So when we're seeing that sort of behavior, well, I know this is going to push back down for me. So again, what I can do is if I'm seeing a wick here, I would want to see a bit of a wick on the top here as well, right? Wait for the pullback to happen, wait for your EMA 6 line. If it comes close, hits it, take your reversal trade. So in actual fact, this would be a trend follow trade going south. You win that trade. Here's an example of what the third candle did. So see if you can repeat the process here. Possibly look for a longer wick on the top of this one so you're safer. Sometimes the market maker can just push this back up and consolidate for a little while. Okay, here's a trade you could have done. So that's 2 wins, or there would be 3 wins. And for Forex traders, here's possibly 15 pips. You could probably use your Bollinger Bands as well as an exit strategy, but here's 15 pips. I'd probably set a limit at about 10 to 15 if you just want to take very short, comfortable trades for Forex. That's it. Okay, let me have a look at another currency pair. Let's see if we've got other setups here. AD/USD, something similar happened in this regard, where here's what the market did during mid Asian session. Market pulled back down. I think I did trade this one as well. It was AD/USD, AD/JPY, and I think pound JPY is when I predicted the push up on that. Anyway, again, market consolidates this big green candle, followed by this one here, is showing me that this is a confirmed double top for me. The market is coming back down again. Okay, so this is an M. The other thing that I'm paying attention to is the high of New York. So if I'm going to pay attention to, well, if I'm predicting market's going to go up somewhere and then push back down again, well, I'm paying attention to the high of New York. Here's the other thing that you want to pay attention to, guys. See, this is happening in real time, where market just issued you with a pretty long wick here. Now, a couple of things can happen here. Again, this is where binary options can go wrong. One is that the market can push back up and issue you with another green candle before it comes back down. And this is another example of where the market comes back and has a triple hit before it may consider going south, right? So if you take a trade on this one, you possibly could lose it because this may end up being a tiny green candle because, hey, market maker could just consolidate for a little while. Plus, this is still 15 minutes out from the beginning of London, right? So they may consolidate for a bit, they may pull back up for another little bit before they move the market back down again. Okay, chances are they might not consider moving the market back down. For me, this is still an M formation, so this is going to be a slight push. How I would trade this, I'd wait for this to be a red candle, a nice comfortable red candle. Wait for the bottom of this to finish something along these lines before I take a trade down. For those of you that want to be a little bit more cocky, certainly this candle here is justification enough to enter a put on this on a pullback. But certainly, you know what I'm saying, if you want to do a couple of really good trades a day and your aim is to be able to drop $1,000, £1,000 or €1,000 onto that, then you probably want to wait for your confirmations. And this is where patience and discipline comes into it as well, because certainly I know all of you are looking at this in real time saying, shit, that looks like such a good trade. We've got to put a whole entire house into it. But here's the thing. Chances are, as I said, this could have just pulled back briefly. Look at this one here. This is a nice long wick followed by a red body on this one. What does the next candle do? It pushes down for a while. That's going to be a red candle, right? What does it do? Probably in the last few minutes of it, market pushes back up and closes in the green. Here's the thing. We want to make sure that this is going to be continuing down. Now, this is a confirmation. This is a confirmation here. That was a stop hunt. This is another confirmation. We could have traded this one. This is part of the reason why I don't trade this candle here. Okay, because chances are this could actually go up and screw me and offer me like a tiny green doji up the top before it decides to pull back down again. What you can also do when you're seeing this sort of behavior is jump onto a higher time frame and look to see what else is going on there. So this here would have been significant. This was a doji, nice long wick to the low. For whatever reason, I've got a line drawn in here. I don't know when I drew that one in, but for in this instance, it did come and hit the line. That would have been a nice entry, right? Who would have known? But in this case right now, this is showing me this is possibly an indication where the market maker is not going to go. This might have been a false move, okay? So consider it. Add it to your list of whatever priorities you have on your criteria that's going to consider you entering a trade. And just before I close off this video, I wanted to actually state a couple of other things. What I've just explained to you there now is a list of triggers, okay? Begin to create your own list of triggers, and in this case, what I'm doing when I'm playing around with this template and adding stuff onto it, I'm using these things to create my triggers. So for example, if the market is just consolidating, I might say, well, I'm not going to really do anything with it. But say for instance, it's going to come and hit my Bollinger Bands, or the Bollinger Bands are constricting and then they start expanding in opposite directions. That becomes a trigger point for me. And what I mean by trigger point is at whatever time, when you're in, say for instance, you're screening up, you've got multiple currency pairs that on there tiled like this, and I'm busy doing something else on my laptop or watching a movie or whatever else it is. If one of these currency pairs price action goes and hits something that I've deemed to be a trigger point, that's when I start taking notice of what's going on in the market. That's when I'll probably do a quick analysis of everything else that's going on, right? And prior to any of that happening, what I probably would have done, if I'm sitting down for some trading or I've got the charts open, I'll probably quickly analyze all of this and then predict where the market's at within its cycle, where I'm thinking the market's going to go. And so in my mind, I've also got, and I've got this written down, right? So in my mind, I'm also thinking what the market will do in terms of a possible signal or a possible trigger, which will show me that, yes, my prediction is accurate. Right? So in this case, I had an idea that the market is going to push back up and hit a point closer to where it hit previously. See, here was the previous point. This candle was something that was like an alert for me. Okay, look for these trigger points. This is a trigger for me. This is a full, what was that, half an hour before I would have taken that trade. Yet now I start paying attention, and if I see it on one currency pair, I will note down what other currency pairs actually positively or negatively correlate with what I'm seeing right now, right? So if I'm seeing this on, say, Euro USD, then USD CHF is going to do exactly the opposite of it. So I'm going to look at the correlation between those pairs. So in this instance, if I'm doing my analysis on AUD USD, I know that most likely AUD JPY might look exactly the same, and possibly Euro USD might actually have somewhat of a similar look, and the rest of these might as well. Any of the JPY pairs, they might look similar. So what we're going to do is we're going to analyze this. So we're going to look at news very quickly to say, okay, if there's going to be a positive release for the Japanese yen, chances are the JPY pairs will react differently to the AUD USD pairs now. So AUD JPY and AUD USD might do something slightly different. Okay, that's what I'm starting to think now, simply because if the yen is strong, I know AUD is going to come down, but at this point in time, the USD is not really doing anything, and the US market is closed. So where I saw AUD JPY pulling down, which was somewhere, where did I see this? Actually here, where AUD JPY just started coming down. At this point, AUD USD remained in its position for a good half an hour, but here it already started to push down. Notice that? So I could have taken, I do believe I was in a trade here. I had taken one of these trades for the longer term for like an hour or so. So I believe it was here, whereas for me, AUD JPY, if I had that trade replicated on AUD JPY, that would have started falling. The reason why I didn't do it was because there was going to be Japanese news release around that time. Okay, so you can actually use that to ensure that you don't get caught up. Now, yes, I have mentioned that I don't believe that the news will significantly alter your trades. What I do believe is that if I'm seeing news releases happen and I've predicted a move that's going to happen in a particular direction, chances are there's going to be a fluctuation in the market. The market makers will probably use that for various reasons, stop hunts and that sort of stuff. But in my case, I know that that can actually justify my trade. So if I'm predicting a move south in this regard, and I see fantastic news from the Japanese, then I know this is going to move quicker, so I can actually enter my trade sooner. Okay, take note of that and utilize that as a possible trigger point. Okay, so once you've seen your trigger points, this was a trigger point for me that chances are at some point in the afternoon going in towards the London session or into the London session, market's going to push back up here somewhere and then pull back down. That was my trigger point here, which is at least a good 4 hours prior to this actually happening. Okay, so where were we? We were... Okay, take notice of this. I don't know which currency. I do believe we were talking about AED/JPY, was it? Okay, actually, no, it would have been Euro USD. No. Hold on a second. It was AED/JPY, I believe. It's here when I was talking about the pullback. Actually, here. Sorry, my apologies. I'm jumping onto the wrong currency pairs. AD/USD is, remember, after this, where we're saying there's going to be push down and then possibly the next candle is what you want to look at. This one's already jumped in, simply because they made the move sooner here because of Japanese news. Okay, so that's the correlation. These guys are moving behind the times. Now, I'm looking at this and I'm thinking, okay, the future here might probably foretell what's going to happen here. So the past here is going to foretell what's going to happen most likely here. So I can enter a put on this one. Okay? That's how you trade. All right, guys, have a great weekend. I do want to let you guys know I'm taking a brief break for the next couple of weeks, at least till the end of April. I'm exhausted from doing all of this stuff. The daily clearing and abundance sessions will continue. I'm going to go spend a bit of time meditating and doing all that stuff. I'll be doing my own trades, but there probably won't be any videos for a little while. I will probably start with that free time, put more articles up on the blog as well. So I'm going to write various pieces, and they will go up. But look, if I'm not responding to emails and that for a little while, then please forgive me. But I probably will be back on the ball towards the end of April. Okay, so all of you have a great weekend and have a great couple of weeks towards the end of April, and we'll catch you at the start of May, I suppose. All right, all the best.